Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, May 21st, 2009. Well, a nice decline on Wall Street today, folks, and we're going to go into why we're having this decline. I want to talk about some main key technical levels. Now, you can see on the charts of the intraday Spiders 10-minute chart here that I only have three major trend lines on because I really wanted to focus on these to give you guys an idea of how accurate these trend lines are and how important it is to be a student and an educated individual or trader or investor of trend line analysis, price, pattern, and time. These three trend lines, and again, you can see the one in blue right here, the one below that in green, and the one in red, they're all major levels that if you scan back a little ways, and I'm going to show you where they come from, are major players in the market, and they give you exactly the highs, the breakdown points, and the lows in this market, and when we retrace, they give you the resistance levels, as you can see right here. Okay, now what's going on right now? We had jobless claims this morning, folks, which are sending a little bit of a shockwave through. I've been preaching this, and so has everyone here at InTheMoneyStocks.com, that things are not as rosy as the market's making it out to be, nor as rosy as Geithner, Bernanke, or Obama's making it out to be, and I think that's important to realize. Over 600,000 jobless claims number again comes out. That is not a pretty number, all right? Everyone's looking for these green shoots to come out. It's looking more and more like they may be a little bit of the weed variety instead of actual flowers, if you will. All right, now taking that into account, you saw the futures initially dump on those numbers, continue down. We opened and gapped lower on this market, as you can see on the spiders right here. You had an initial gap down just above a major support line at 89.40. Those of you that have the intraday videos, the nightly videos that are part of the Research Center, which are a different video than this one, which are much longer, more in depth on the dollar, oil, gold, the markets, the SPY, you name it, we go into depth. Now, those of you have all these key levels. These are all levels that you had on your charts, obviously, and you want to be able to test them and see why. Now, notice the gap down right above support of the green line. What happens right here? You end up staying above. What that tells you when you don't close below it, it tells you there may be a near-term bounce coming in play. That's exactly what happens. You get a bounce, a retest, a bounce again, and each time you're hammering on the blue trend line right above. Now, I'm going to show you where these levels come from because it is absolutely fascinating, and I need you to understand exactly where they come from. So let's first look at the blue and the red line, and let's go back and see. And we'll even look at the red one. We're just going to go back a few days and see exactly why these are so important. All you have to do is go back to the 18th. The 18th of May, which is just earlier really this week, you can see to the pinpoint accuracy why these levels are so important. See the green line where we gapped right above it? What is it? It's gap window support. See how you didn't have any trading in here and you gapped up? Now the gap up level of the blue line, if you take the high candle area right here, see how there's no candle could close above and you fell back to the green line right here and then rallied up and you went sideways before breaking up? That's telling you there's support right there or resistance depending on which side you're on. When we gapped below it, it became resistance, obviously. All right, and again, all traders or investors should know this by now. If you're following these videos, then just continue to follow. You'll understand. Obviously, join the Research Center, which for our premium subscribers just goes into even more depth, this kind of thing. All right, so again, just understand. Now look at the green line. Green line, as I mentioned, gap window. You can see there was no trade below this all day, and the lowest trade level was right here. And then gap fill is the red line. So these three lines, notice how perfect they are. It doesn't even take a genius to find these, to be honest. It's just most traders are too lazy to do it. That's the bottom line. They're too lazy. They don't understand. They wait for some ignorant analyst out there to make a call on an upgrade or a downgrade, and they just go by that. That's the problem out there. That's why most traders lose money. Most investors lose money. Simple as that. Listening to other people. Do your own research. Understand. We're here to teach. That's what I'm doing. I might tell you what the support levels are, but I show you, and we show you here at In The Money Stocks, how we get them so you can make the judgment for yourself if it's a valid argument. Okay, so again, notice each level. Now let's go back to current time and see. Check this out, guys. So you gap right above green, which is support, obviously. You rally up into resistance, which was the blue line. All right, as we showed, finally you close below green line. Green line breakdown means you're going lower. What happens? You sell off, minor bear flag. Notice price pattern and time. Guys, that's our holy book here. Price pattern and time. So timing is key, and you can see as well as price and pattern. Pattern beautiful right here. You have a down move, 1, 2 inside bars inside this red part of the down move. That tells you another down move's coming. You sell, where do you go? Gap fill to the penny, basically, right here. Look at that. How perfect is that? What's that mean? Good support here, good buying opportunity. Take the long right in this area, and what happens? Up we go. all the way, where does it go back to? Green line. Also 20 moving average. You can see the 20 moving average in yellow sloping down, but green line being more important than anything, but the necktie also created here by the 20. So that's telling you right there that you're going to have resistance. That's where you take your money off the table if you went long right at the lows here. And again, just notice how every line here is telling you exactly what to do. You could even go short here for a little bit, although you want to be careful that you could have inside bars right here, and you want to be a little cautious. But in any case, the long to here was the easiest play in the book. Gap fill, go long. Okay. Where do you sell? Right back into resistance. This line, now that was broken, is now resistance. Remember, support, because you're above here, you rally off of it. Once you close below, becomes resistance now on the upside. As simple as pie. I mean, it's so simple here. Okay? So again, down we go. Sideways pattern. Now notice again how the sell-off here, these are all inside candles, but what I like to show here is a change in direction. So here you have what could be considered a bullish pattern formation, but then notice the next three candles, 1, 2, 3, you never take out the high. When that happens, this becomes the dominant pattern. So the down move now becomes dominant, and this becomes a bearish pattern off of that down move. All right, now I want to express that again. So again, notice how right off of this pattern, right here, this could be a bullish pattern. But once you don't break out and you don't take out this high on the three first up candles off of that, really what I say to the traders in the chat room is you have to break out on three candles once you make a green candle. So green candles number 1, 2, and 3. By 3, if you haven't broken out, it's telling you there's a bear flag in play here off of this down move now. All right, so down move, sideways inside this little down move tells you more downsides coming. Where's it also going right into? The green trend line again. Green trend line, fantastic shorting opportunity there as good resistance. What's happening in the markets? We're beginning to sink lower. Now, there's a couple other things I want to point out here. First of all, some of the traders in the chat room, along with myself, we picked up a little bit of some short the market plays yesterday in the chat room. We talked about it last night to those in the video, the nightly video in the research center. I have unloaded those obviously in today's action because again, the problem that I had going into the rest of the day is that you have volume just dying out, and I mean dead. Volume is going to dry up here into the end of the day. Tomorrow will be probably even lighter. Generally, when you have light volume, the market can sometimes go up. Now, the dollar right now is having a big impact, and that's another story we'll cover in the Research Center video tonight, how key the dollar is to understanding where this market's going to go. But what I would just caution people in doing and understanding is you have to understand how the market right now, when it dies out in volume, has a tendency to float up or at least float sideways to up. So you have to be cautious here. All right, yes, it's a beautiful resistance line, absolutely, but now you've hit it twice, so if we were to rally back up, it may break through. Where would it go? The blue line, obviously, right up here. If you continue to sell here until late afternoon, and you get a little bit of a volume surge, you may be able to come all the way down to a double bottom. Double bottom right here, gap fill, obviously, will be good support again. So these are all levels to watch. You have to understand your levels, understand the rules. This is all things that if you belong to the Research Center, you learn. If you belong to the chat room on inthemoneystocks.com, you understand and really learn, and you can live and breathe this stuff and profit so easily from this if you just understand it. All right, ignore the nonsense. Our motto is ignore the Wall Street hype, avoid the Wall Street hype. It's so true to do. Can't stress how much. You have to be a student of the technicals. Everything in life is cycles, folks. All right, a day is a cycle of 24 hours. All right, you have a cycle of a month. You have a cycle of a year. You know, the Earth and so forth revolving and so forth. So there's just so much that comes into cycles. That's why mathematics. You have Fibonacci. Flower petals are Fibonacci, rotations. There's so much in life that's part of this that it's obvious that it's going to come into play here when you have human emotion trading the markets. I know as human race we're somewhat egotistical sometimes and think we don't, go by any rules, but believe it or not, we absolutely do. Fear and greed, guys. Those two things dictate, and it's all on a mathematical scale. Very simple math, too. You don't have to be a genius. I'm by no stretch a genius when it comes to math, but it's all about simple rules, understanding trend lines, understanding sentiment, understanding psychology, understanding price pattern and time. You get that down, you're going to be a 10 times better trader, if not more. All right, folks, just continue to watch here. See how every level's working out perfectly. I just focused on these today because I just want to show you these three levels, how key they've been all day, how you've been able to play anything you wanted off these and be an excellent trader and profitable today when the market's actually tanking today. Down about 152 on the Dow right now. Transports down over 100 points. That's a big drop on the transports as well. And let's not forget the NASDAQ, which is lower by 38 points, and the S&P down 17. So a nice down day here. Volume again. Notice the volume down here is getting very, very light. We have to be cautious because of that now for the downside. You want to be very cautious just in case light volume decides to lift itself up here. All right, take care, folks. Thank you as always. We will talk to you tomorrow.